So today we are going to talk about market maker cycle, the peak, and the peak reset. The peak and the peak types. So the market maker cycle. Some people call it the 3-day cycle, but I call it the 3-level cycle. So the market is based on 3 levels. We have the MAAW or the WVVM. So where's the notation here? So before the dealer swings the market 3 levels, he would form a peak low or a peak high. So this will be a peak low here. And then there will be 3 levels. The first level, so if the peak is low, we expect after each level there will be a level of consolidation and a stop point will be there. So there will be a stop point low, then the dealer will form a pattern here. And then there's the second level consolidation, stop and low. So this one we call it the W, the V, and then the M. So suppose now the peak is high, we'll have the M, the A, and the W there. Okay, so we have the M, A, W. So I can see some of you having difficulties in knowing that if the cycle is completed or not. So I have three criteria in knowing that the cycle is completed or not. So the first one is the MAAW or the WVVM. So if I see the first level clearly, the second level clearly, and the third level clearly, I'll look for a reversal there. So the second criteria will be the ADR, the 3 times ADR boxes. So if I plot the 3 times ADR boxes on my analysis, and dealer has met the 3 times ADR, I don't see the levels clearly, but dealer has made the 3 times ADR, then I know that the cycle is complete, so I would expect a reversal there. But the 3 times ADR itself is not enough for me to conclude that. I would take into account the number of days the dealer has moved. Is it 3 to 5 days? So I've looked into many peaks and on recent markings, and I've seen that the dealer will take 3 to 5 days to complete the cycle. So if the 2 confluences among these 3 have met, then I would look for a reversal there. So if I see an MAAW without the 3 times ADR, but with the 3 to 5 days cycle, then I'll look for a reversal there. If I have the 3 times ADR with the 3 to 5 days, then I'll look for a reversal without the clear MAAW or a WVVM. So the 3 criteria there, the 3 confluences, I'll combine the 2 for a powerful reversal. So from there, any question?
Yo, the MAAW is 1 hour time frame, right?
Yes.
Strictly 1 hour time frame.
This is 1 hour time frame. We're talking of 1 hour time frame here. Levels are visible on all time frames, but they're clearly visible on the hour 1 time frame.
Okay.
So if you look So the first level is usually market maker driven, a fast move. It catches all retail traders surprised here. The second level is driven by emotional traders. And the third level is market maker driven. You see market makers hand on the third level here. So this one is an example where there are 3 times ADR here in 3 to 5 days, but the 3 levels aren't clear here. So let's talk of the market maker trend in perspective, with perspective of the retail traders. Where is the Y? So when the dealer sets the peak high here, so we have a big M on the hour 1 time frame. Okay, and we come for the third time here. And then we know the first level is market maker driven. It's usually fast. Retail traders will be surprised here that why is the trading zone going short while we anticipate for a long trade? So this is usually fast and catches all retail traders surprised. So the dealer knows that retail traders here are surprised, so he would give them a chance here on the second level when he does this stop and high. So it gives them a chance here to draw their trend lines. Like, trend lines here, there will be the first touch. And then here, this one is the second touch. This one is the second touch here. And here we will find that on the hour 1 time frame, upon level 1 completion, the 13 and 50 EMA have crossed. Let me draw them. So the 13 EMA will be around this area here. And the 50 will pass along here. So the 13 and 50 EMA will cross, and on the second level, we'll find the 50 and the 200 EMA crossing on the hour 1 time frame. So the 50 and 200 on the hour 1 time frame, the crossover there will fire a signal to all retail traders, and all other traditional indicators will also fire a signal that this now is a downtrend, and they'll draw the trend lines and all that. So it will be a second touch, and all other indicators will fire signal. So retail traders will wait for a confirmation there. And the confirmation is usually another touch to the EMA or a touch to the trend line. So on the third level here, second level going third level, the dealer would offer the third touch. So come here for the third touch. So he would allow retail traders to sell. While retail traders are selling, they drop the price further, and see more retail traders will sell and sell. See some retail traders can enter in a position around this area. So while they are selling, he will buy against the retail traders, and then he will apply the brakes, come back and book a profit. How does he book a profit? By hitting the stop losses of the retail traders. And on the third level here, so he'll be chopping around, moving the price further down, like he gives them other confirmation for them to take short trades. So their perspective on how the market moves and our perspective is different. And here the EMAs, we find the 50, the 200, and the 800 will be, they'll fan out. on the hour and time frame. And this one is an indication now to them that the trend, the downtrend, has the highest momentum. And to us, we know that this is the third level. We are looking for a reversal here. So that's how the cycle is seen by the retail traders, and we should know better on how to work on the cycle. So let's jump into peaks, or someone has a question there? Anyone has a question?
Robert.
Yes.
The 13 and 15 came across, show that the first level is finished, right?
Yes, and that is in our one time frame. Do you have a question there? So let's jump into peaks now. We know that before the dealer swings the market away, they would first form a peak. So the biggest responsibility of a dealer in the market is to provide liquidity to the market. He's the market maker. He makes the market. So he would set a trap zone high. So he will trap liquidity high, and then he will swing the market away from where he has trapped the liquidity. So that's how he makes the market. Now let's look on the peaks here. How do we identify that a peak is formed in this position? So you need to first conclude that the market maker cycle is completed. That's the first very basic thing about the peak. So you should know that the cycle is now completed. Once you know that the cycle is completed, now I categorize the peaks into three types. I've seen them happening. The three types. So the first one is the consolidation peak. So for a consolidation peak to happen, you should know that there will be no news release around during the peak formation. So simply the market maker would form a peak here at the first level, the second, and the third. So for the consolidation peak, the dealer would apply the break today on the hour one time frame. So he would chop around here for more than 2 days. So he would apply. So he would apply the brakes today, and he will chop around this area for 2+ days. The aim of chopping around this area for 2+ days is because on the first day, the dealer would hit the stop loss for the retail traders, and retail traders are told that when your stop is taken, when you lose in the market, you need to stay out of the market for 1 day, evaluate yourself, and then come back in. So they would wait there for the retail traders to come back in, and then if they come back into the fray, they will give them the entry confirmation and swing the market away. So the dealer would stay here for 2+ days, and you'll see him extending the price further down to satisfy various criteria for sell positions. But there's a certain row here. See the certain row here, like a blue trace. I can even draw it. Can you hear me? Chambuso? Wow.
Internet connection is unstable.
Can you hear me?